Okay guys, so since our last video, we have seen a fair bit of volatility on Cardano ADA's price action. And in the last kind of few hours or so, we have seen a slight dip of 3.29%. Now, in the last video, we were talking about this short idea. We were looking for an entry in our Z wave high, which is what you see us coming up into. So we did actually see a high here on Monday. That was 0800 hours UTC. This is basically just 1 hour before we actually put the video out live, right? That's editing, recording, all that kind of stuff in the middle there. Now that swing high was a very interesting one. It did come in on a high of 77.71 cents, and then we moved down. We didn't hit take profit. This is the similar kind of situation as what we saw over here, where we haven't yet come down into those lower ranges. We had this move to the upside, and we are still very much in a corrective place for Cardano. But there's some good news, right? Because obviously, there's always a silver lining, and we are actually in a position where momentum might be starting to shift around. So although we've seen a little bit of a move to the downside here, we're obviously in the green. Personally, I think there's a higher probability now that momentum shifts upwards, and I would probably be thinking about closing the position. That's not to say that we can't come back down, but there is a pocket of buying pressure down here. Previous resistance turning to support, as you can kind of see on the chart right here. So we probably want to just lock in those profits or move the stop loss down towards kind of like a 200 EMA into the green area, into the take profit area. So if price does in fact move up and momentum starts shifting back to the upside, we can lock in some gains, right? Because that's ultimately the aim of the game here, is to make profit as we trade in and out of positions. And so to me, it looks like Cardano is likely to see a bit of a push higher momentum wise. It looks like it's going to start shifting, and therefore stop loss now needs to be in profit in around the hourly 200 EMA, in my humble opinion. This of course is a USDT pairing and is on the Binance chart. It will vary depending on the different exchanges that you use. So let's go ahead and take a look at Elliott Wave then, right? Because Elliott Wave tells us a very interesting story, okay? The interesting story tells me that there's another move to the downside before we potentially rally, which is kind of what we're seeing here. And probably by the time this video goes live, it's probably already played out, okay? And the reason for that is the Fibonacci relationships with the price action. So if we take this move right here, we move the fibs over to here, we can see that we came down lower than 1.382. We're bouncing up, so we're looking for the Z wave move to the downside. It's exactly the same pattern that we saw coming up here, but just on this little micro move to the downside. Now, there's a double bottom situation, which is what I'm eyeing as our kind of key area of support at the moment. That's 74.34 cents. And we look at this from an Elliott Wave perspective. Okay, let me go ahead and grab some yellow boxes. Okay, we have the high side right inside here, okay, and I'm going to pull that across just so you guys can see that higher range right there, where historically what we've done is we've come up here, we've kind of found resistance, right? And the same is true at the bottom, but it's a little bit deeper, or bigger, I should say, right? And here you can see that this range is of interest to me, okay? So we have the high range and we have the low range. Now, when it comes to that, what I'm thinking is that we have ourselves a corrective pattern to the downside, and we are likely to see this kind of last little move. Now, there's no guarantees, of course, because I do see momentum shifting, and basically we're looking for bullish momentum to take over this kind of bearish looking chart at the moment. That is seen here on the stochastic RSI. Let me go ahead and bring that into view so you guys can see. We have upward momentum shifting on the 1 hour and 4 hour and daily time frames. So we are looking for a shift upwards. It might not be major, but it is something to consider, and we want to be locking in profits, right? So we have that to kind of bear in mind. We also have the relative strength index is in bearish territory at the moment, and it can continue to go down. This is why I think there's still the possibility that we continue going down just a little bit longer before we actually have that rally, the Z wave essentially. Okay, if we bring that back up into view, that's why I'm thinking down here is a high probability move before we get into the relief. So basically, it's a stuck ranging market. That's kind of how we look at it. Now, if we do break on down deeper, that's not the end of the world. Okay, you take the L on the chin if we are to be thinking about long positions. So if we were to think long positions somewhere around here, we put the stop loss at a reasonable area and we target out, you know, a 1.5 or higher risk reward ratio. If it comes down deeper, we take the L and we reassess the position, right? What we don't want to do is put ourselves into a position where we have a really deep deep, stop loss like this, and we're kind of targeting out something ridiculous because we want a 1.5 risk reward ratio, right? It's not likely to be a good scenario for anyone involved. So there is still, of course, the potential for this move towards 71 to 72 cents. I haven't ruled that out, but I'm looking at the chart here thinking that there's actually a higher possibility of a bigger run to the upside once we kind of finish off this last little move. So just to kind of reiterate here, what I'm looking at is a WXYXZ pattern like this. It can also be constitute a kind of diagonal pattern, but either way, we're going to be looking for a move to basically entry again, right up here around 77 cents. That's kind of where we're looking at the major resistances at the moment. So at the moment, we do have lower highs and we do have lower lows at the moment, but we can also take a look at this through the perspective that what we've actually got going on is a consolidation, which basically looks more like this, okay, a bit of a triangular wedge pattern, and this historically has a bigger breakout situation because it's known as a continuation pattern, i.e. what's going to happen is whatever led into it, i.e. that WXYXZ pattern here, the continuation, the triangle based pattern, and then we move out into this bigger explosive move towards 80 cents, right? There's a lot of noise going on this smaller time frame. It's a little bit messy. So if you're not into kind of trading the smaller time frames and you're actually, looking at bigger movements and you're not really too fussed about, trying to take every single percentage point and snipe every potential entry, well, that's really where we roll things up into a daily time frame, because the daily time frame removes a lot of the noise. And on the daily time frame, we are, of course, still targeting out that slightly higher range, this being between 93.85 and $1 too. So we are looking for this kind of $94 to $1 range, right? And that is still very much in play. We have found great support above the 200 exponential moving average and 50 exponential moving average with a golden cross looming. Now, the golden cross, of course, is the simple moving average, the 50 simple moving average, the yellow line coming through the chart here, crossing higher than the 200 exponential moving average, the white line coming through the chart. Now, I said about a week ago, we're a couple of weeks out. I would say that we're probably now 3 to 4, maybe 5 days out from that golden cross. The golden cross, of course, isn't actually like something to get terribly too excited about. What it is doing is it's only telling you what's already happened in the price action, right? So you've got 50 simple candlesticks, and whatever the average of that is, that's your yellow line. And then you've got your 200 exponential moving average, which is basically the last 200 candles, but is heavily weighted to the most recent price action average. Okay, a little bit of a mouthful, but basically what we're saying here is when the 50 SMA crosses above the 200 EMA, the price action or the short-term price action is higher than the longer-term price action. So it's not really like it's telling you that you're going to see a big bullish run to the upside. All it's really telling you is that on average, the short-term price action is above the long-term price action. Now, why do we call it a golden cross? Why is it an indicator then? Well, it's an indicator because there are behaviors that basically go alongside it. When you have things like a death cross, it instills fear. And when you have a golden cross, it instills hopium. And basically, a lot of people start thinking, okay, the price action must be more bullish now because the last 50 candles, average of them, is now higher than the last 200 candles. Therefore, the market's more bullish. Okay, you can take a golden cross with the fact that the price action is consolidating above the 200 EMA and the 50 EMA, and traders are going to act positively to the price action, and they may actually enter some long positions or even do some spot buys. Okay, so with all of that, and Elliott wave already pointing to 94 to $1, it's important, or 94 cents to $1, it's important then to reflect on some other confluence that we can use, right? So the candlesticks themselves tell us that there is a corrective pattern to the upside. It's not trending to the upside, okay? And the key differential here is how you have overlapping price action, okay? So for example, we can see some traditional ways of looking at the market, right? The 200 EMA being resistance right here, the breakthrough and the retest of the 200 EMA, right? That's great. However, Elliott wave, which tracks people's behavior, tells us that there's some hidden kind of truths to this move. So this resistance up here is a key piece of resistance. We had the breakthrough, but then when we came back down and we tested it at the previous resistance and turned it to support, i.e. the 200 EMA from resistance and turned to 200 EMA to support, the price action overlapped. Okay, now that overlap, according to Elliott wave, is a an indication that we're not trending. Okay, so it's important that we understand that from a traditional way of looking at the market, this is insanely bullish, right? We're above the 200 EMA, we're above the 50 EMA, we've got a golden cross looming. Those are like really bullish indicators from a kind of candlestick analysis with a little bit of, moving average to help you kind of understand what's going on. Elliott wave, on the other hand, tells us that okay, it's great, we've got this move to the upside, but this move to the upside is not sustainable, okay? And that's the difference. And it's not sustainable because of the behaviors of people buying and selling. That is ultimately what Elliott wave is doing. Now, Elliott wave is really complicated. It's not for everyone. I put together a whole course on it because it's so complicated. I think it's like 30 different kind of videos all pieced together. It's really easy to understand Elliott wave. It's really hard to implement Elliott wave, right? So you can take that course if you're interested in understanding more about it. And if you want to try to practice it, you can join the free Discord that's linked in the description down below and all that kind of stuff. But when it comes to Elliott wave, it's telling us that there's still more room to the upside. So again, it shows that the traditional way of looking at the market is still good, but obviously we can't be expecting ourselves to move very far based on just the 200 EMA acting as support and a potential golden cross. But it does tell us that we have got this kind of barrier around $1. It's also a psychological barrier because it's a nice round number. Okay, so we see Elliott wave here with the WXY, with the ABC internal within the Y wave pattern and structure, and we are basically just looking to see that breakout to the upside. Now, is it possible that we're still inside the B wave? Absolutely. That means that we lose the 200 EMA as support, but I think there's a lower probability of it. Like I was talking about the stochastic RSI and the RSI on the smaller time frames, here on the daily time frame, we are still in bullish territory on the relative strength index via the daily time frame. Okay, so here you can see that it's above 50. It's actually 50.93 at the point of recording today's video. As long as we hold above this area on the daily time frame, we're actually in a really strong position for Cardano to find great support and continue this move to the upside. The stochastic RSI also confirms this. If we bring up the stochastic RSI, you can see here that we're actually in bullish territory. Oversold. Basically, it means that buyers are just looking for the right excuse at this point to actually go ahead and FOMO in or buy in and go long on the market. Okay, that's what the stochastic RSI is telling us, but it doesn't relate to price action specifically. The RSI is 1 step removed, the stochastic RSI is 2 steps removed. So that basically means that you can't look at the stochastic RSI and say, look, we've got all this room to the upside, we're going to be basically rallying, right? Instead, it's showing us that momentum is likely to be shifting into a bullish state from a bearish state. Okay, now how far those bulls take the price action, you can't use the stochastic RSI or the RSI for that. But it does give you an idea that momentum is potentially going to be shifting more bullishly than it is bearishly based on the positioning of that momentum, i.e. the markets are oversold, they're just looking for a reason to actually deploy some capital back into the market after taking some profits from the overheated areas that it was in not that long ago. Okay, so with all that said, we also have a MACD. The MACD histogram is what I'm interested in specifically, not so much the moving averages that you get involved in. Now, in here, the MACD histogram is very interesting. You can see that there is weakness on both sides. This is something that we saw back in November of 2024 before we had that fantastic breakout. What we're seeing here is basically not a lot of participation on either side of the argument, and should something happen one way or the other, you're going to see a significant swing in the price. Either a complete breakdown if some bearish news does indeed break and drags the entire market down. Likewise, if there's just an inkling of some positive news on the horizon, we might actually see a fantastic break to the upside, targeting out that Elliott wave 94 to $1 level. So our indicators, they're actually confirming what our price analysis and our candles are saying. However, you do have to, know what you're looking at, right? Being oversold, is one indication, but knowing that it doesn't relate to price action is just as equally as important as understanding that the MACD histogram is only really showing you the volume profiles, right? With the candlestick analysis, we can see that we're in a short-term move to the upside. This is in line with our bigger macro weekly charts as well, where we are looking for a lot of these kind of pump and dump kind of movements during the course of 2025. We've spoken about that for what feels like months at this point, right? But here we can see a pretty clear path, right? We've got great support on the 50 EMA, 200 EMA, with a golden cross on the 50 SMA crossing above the daily 200 EMA. We have the Elliott wave WXY pattern with a C wave structuring out between 93 and $1. We also have a relative strength index above the 50 level on the daily chart with an oversold stochastic RSI variation on the daily time frame. The MACD histogram is showing a weakness on both sides and just an excuse to pull the trigger one way or the other. There are more reasons to be bullish on Cardano at this point in time than there are to be bearish, and ultimately that is the game that I'm trying to play here. What is the highest probable outcome? And for me, it appears to be a rally to the upside. Now, it's going to take weeks to probably play out. It's not something that's going to happen overnight. If we're lucky, you might get it within a 1 to 2 week window. If you're unfortunate, we might be looking at something that drags out over the next kind of 3 to 4 weeks. But ultimately, I think everything for Cardano is working out quite nicely at this point in time. I'm going to leave the video right there. If you have found it useful and informative, smash the like button. If you are new to the channel, subscribe, and I'll catch you all in the next one.